Okay, welcome back everyone. Michael here with Offshore Citizen. Today I'm going to talk to you a little bit about a kind of different angle of things, which is tax fairness, all right? And maybe like ideas around how tax reform should work. And this is based on kind of reverse engineering and saying, hey, how do we build wealth with tax? So I'm going to do a series of these, and hopefully you learn some things about, how to utilize the tax system to build wealth, and just in general how to build wealth. But also I think it's worthwhile to consider this from the other side, which is, hey, like if you were to design the tax system, how could the tax system be? Because just because we're trying to optimize for it doesn't mean we don't have a certain belief in fairness, etc. So anyway, we'll dive into that. But just before we do, click the subscribe button, click the notification bell, check out our other videos. If you like this video, please click the like button. And if you're interested in assistance with international tax planning, with asset protection, with banking, with forming companies, with residency, citizenships, payment processing, etc., there's a link below, clarity.fm/Michael Rosmer. You can click to book a call with me or check out our websites. Now, let's dive into it. Okay, so my basic theory is this, okay? My view is that I actually, I have a strong justice mechanism. So I don't particularly like paying taxes. I mean, obviously I don't pay, who likes paying taxes? Come on. Second of all, I think that it's very stupid to pay taxes to organizations that use taxation inefficiently. Okay, so if the US is spending 18% of GDP and delivering inferior health outcomes to their people versus Singapore is giving world-class health outcomes for 4% of GDP, I'm kind of like, well, what the hell's going on there, right? So in that sense, it's like, well, listen, I don't think it's a good idea to keep pouring money into a system that's broken and doesn't work. That to me is just like a really dumb use of resources. That being said, I don't think that it's a good thing that some people should benefit from the tax system and others do not. What do I mean by that? I tend to be a meritocracy person. I tend to be somebody who, I believe that as much as possible we should design the systems of the world, the systems of our country, our governments, etc., such that if you're rewarded for ingenuity, for hard work, for perseverance, for being resourceful, for working well with people, for all these sorts of things. Part of it should not be, oh hey, and by the way, you happen to do the things that we like in the tax code. That shouldn't enter into the picture, right? I guess maybe you could argue, okay, well, Tesla is selling cars which have battery packs that are subsidized by the government, and we want to encourage this transition. Maybe you can argue that based on the fact that there's unpriced and negative externalities that come from fossil fuels and things like this. Maybe you can argue that. But all of that aside, I think the whole point is that taxes should not be the mechanism by which you gain an advantage. You should gain an advantage by doing business better. That's how you should gain your advantage. And then taxes should just happen. Now, that's in a perfect world. We don't live in a perfect world, and so we want to take advantage of how we can optimize our taxes. So one of the things that I find really interesting is when I talk to people, a lot of the people, on forums, on blogs, articles, social media, etc., they just have two complete lack of understanding. One, they completely misunderstand taxes, which is alarming and tells me that, hey, we should probably teach this stuff in the school system. There's probably a need for financial education. And second of all, they don't understand wealth building. And so when you don't understand wealth building and you don't understand taxes, what you're going to try and do to design a more effective tax policy, how you're going to vote, etc., is going to be delusional. It's going to be deranged, okay? Which is why we're going to have this conversation. So I'm going to talk specifically about one thing today, and that is how different types of income are taxed differently, okay? So specifically, dividends, well, basically, in a lot of parts of the world, income from capital gets taxed differently than income, like earned income. So if I go have a wage, I get taxed at a higher rate than if I receive a dividend. If I go and I'm earning business income, I get taxed at a higher rate than if I sell an asset that I bought and it went up in price and I sold. And this is quite bizarre if you think about it, right? It's like, well, hang on a minute. If I bought, let's say, inventory for my store, I went and, on AliExpress, I bought a bunch of t-shirts, I had them shipped here, I paid $2 each, I turned around and sold them for $20 each, I'm going to pay tax on that full amount. But if I went and I bought a house and, it went up from $20,000 to $200,000 over what period of time, I pay a lower rate of tax on that growth. This seems bizarre, really, if you think about it. Like, why would that be? But that is how the way the tax system works, right? In some cases, there is no capital gains tax at all, right? In some cases, there's no tax on dividends at all. In some cases, there's no tax on interest at all. There's all different types of, depending on where you are, they have different structured taxes. And, there's reasons for this to try and incentivize certain behavior, but also it just opens up a whole bunch of corporate lobbying and loopholes. And frankly, I'm not a believer in corporatism. I'm a believer in small business. I'm a believer in free enterprise, but not in corporatism, okay? I think that large enterprises should be treated fundamentally differently than small businesses. Anyway, that's a whole other conversation. So this is a point that Warren Buffett has brought up, right? If you think about this, you actually want to incentivize people to be working and to be producing things. And so taxing capital at a lower rate than work is very counter logical. And what does this do? This inherently, because capital scales really well, but your time does not, it inherently exasperates differences between people who already have assets versus those who do not, right? So you go and make $100,000, you pay 40% tax on it, right? So you have $60,000 left. This other person, they go and they take they make $100,000 off an investment. They pay 20% tax on it, right? And now they have $80,000 left, and they can reinvest more, and it's going to compound for them over time. Versus this person over here aren't going to be able to do the same thing. Well, who added more value here? Arguably, these people over here actually added more value than the ones over here. The theory behind this is we've already paid your investing after tax dollars, but I don't really buy that, given the fact that you have this fundamental limitation on your time. Okay, so that would be, I think, one of the first things that should be addressed. So a lot of people talk about having flat tax systems. A lot of people talk about having, basically like not having a minimum tax, et cetera. I don't think minimum taxes are good. I think minimum taxes are an attempt to deal with the inadequacy of the original tax system design. That's a stupid system. I also don't think that flat taxes are particularly good. Like, there is a rationale for why you have progressive tax systems, and you don't particularly gain a lot, I don't think, by not having progressive tax systems. And we could look at various different countries in the world where they have flat taxes, and I don't see that it particularly works especially well. Okay, so but I think the idea that you tax all forms of income the same, I think, is a perfectly reasonable thing, and helps to it just helps to level the playing field. Like, I'm in favor of leveling the playing field. Now, we're not in that situation, so again, what do you do? If you're somebody who wants to build wealth, well, you should be looking at how do you put your wealth in places where it's going to be taxed at a lower rate, or how do you get involved in things that have better after-tax returns? That's the reality. Anyway, I'm going to leave it at that for this video. I'll do another series of them on some other pieces as well. But for now, if you're interested in any assistance, reach out to me, click the link below, clarity.fm/Michael Rosmer. You can book a call with me. Happy to help you with international tax planning, with asset protection, with company formation, international banking, payment processing, getting residencies, citizenships, all these kinds of things. And I'm going to see you guys on the next video.